Happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities. We're almost to the end of our trading week. It has been an adventurous week already. Kind of timid, though, the last couple of days compared to what we're used to for about the past month now. And if we take a look at the overnight trade, we'll review what we had here for the Globex market here. Not much going on in the corn. It was about as quiet as can be. The nearby May contract unchanged at 7.48 1/4, and July just up one tick. And we had December new crop corn a half-cent lower last night at 6.67. And even though it's a half-cent lower, it was almost on the high of the overnight trade. So it had been under a little pressure, and then it came back here this morning. Well, with our quotes provided by Bar Chart, let's move on to soybeans. And we had the May contract 3 1/4 lower this morning at 16.97 1/2. So it slid below $17. And November new crop soybeans in there 2 1/4 lower at 14.90 3/4. So solidly below the $15 mark now. And then you get to the wheat. In Chicago wheat, you had the May contract 8 3/4 higher at 10.94 1/2. And look at the low last night, 10.64 3/4. So it finished up the overnight trade about 30 cents off of its earlier low. Interesting. Now, what about in Kansas City wheat? Here you had the May contract 5 1/4 higher at $11.25. That was about 26 cents off of its earlier low from the overnight trade. And in Minneapolis, the May spring wheat 3.5 cents higher at 10.86 1/4, and July was up 8 3/4 cents at 10.88. On the cotton market, you had that July contract finishing up 101 points higher at 128.36, and December was up 51 points. It was at 109.76. Now, we just got some new overnight sales information in. It is another sale of soybeans. And this time, they say specifically to China. It was 132,000 tons of soybeans to China, and it's also significant because they want it right now. They want the old crop soybeans, and that's interesting. So let's ask Brian Hoops about that. He's with Midwest Market Solutions. He's in Springfield, Missouri. So talk to me about this deal here with the soybeans. China here lately has been wanting everything immediately. That's a bit of a change in strategy.
Yeah, you're right, Marlon, and good morning. It's good to see that China's coming back in for some soybeans here, especially for this current marketing year. You know, we're on pace to easily meet the USDA forecast, or right now, and we need to see that continue as we go through the spring time frame. And it just looks like, you know, South American supplies are not going to be adequate, and that's why China's stepping in here more this week. Last week, they basically took the week off, but this week they're coming in a little bit more aggressively, even though it's to an unknown destination earlier in the week. You know, a lot of people suspect that it is China based off of rumors that they are buying out of the Gulf and out of the Pacific Northwest. So they've been inquiring all this week. I guess so. It's not a real surprise to the trade that they're showing up this morning on a report. But it would be enough, I think, to stabilize the soybean market. We have options expiring today, and it seems like May soybeans right around that $17 strike price is an area that's going to make a lot of the puts and calls expire worthless. So, well, that's kind of a magnet as we go through the trading session, but it should be enough, I think, to at least support the soy complex ahead of the weekend and not really see any real further reductions in prices.
Well, obviously, the trade has kind of turned flat here as we await next week's report from USDA. We'll get the quarterly stocks report and the prospective plantings report next Thursday, so we all kind of anxiously await that. Brian, we'll come back in a moment and talk about the setup for a Friday in livestock when we come back. Well, on the livestock side of our conversation with Brian Hoops, we have to talk about the upcoming cattle on feed report that'll be out after the close today. We have some early estimates on what that report may hold, and based on a survey done by the Wall Street Journal, the average trade guess is looking for an on-feed number at 101.1% of a year ago, placements 106.5%, and we have the marketings expected to be around 104.3% of a year ago. So everything above what we had a year ago at this time in the March report back then. Brian, that is quite a change from the last month back in February. I believe the placements number was under 100% back then. So what changed?
Yeah, you know, the cattle, really, there's not that much wheat grass or pasture that's in great conditions for them to to graze off of as we're breaking dormancy. So a lot of the cattle are being moved into the feedlots right now, at a pretty sharp pace. So it's just more of a issue, I think, with the drought that's going on all across the plains. Of course, we did get some good moisture this week, and forecasts for more moisture next week should kind of keep a lid on rallies in the wheat market. But cattle this week had steady to disappointing cash trade. Steady market was not really expected by the trade. We were hoping for $1 to $2 higher, but we did get some other good news this week from the standpoint that the exports were marking near high, the sales were marking near high. Steer weights came down 2 pounds, although we're still well above last year's levels. We're moving in the right direction at least. And this report, looks to be a little negative on the surface, and we're going to have to contend with that. But at least we're going to see a little bit steady to higher trade to start off the morning, with the higher stock market being a supportive feature. It's just a question of how high can we go, and I just don't think we're going to be able to rally very much ahead of that report this afternoon. And with the fact that the economy continues to struggle with high inflationary cost of goods.
Let's review where we finished up yesterday and use that as a guidepost for today's open. Yesterday on live cattle, we did finish higher. We had the April only 25 cents higher, though. June was up 97 on the close. On the feeder cattle market yesterday, we finished up with the April contract up 95 cents at 162.72. We'll see if they get any follow through on that today. And lean hogs were mixed. April 22 higher, but the May closed 52 lower at 114.12 yesterday. It'll be interesting to watch today's action ahead of that report. Thanks, Brian. I appreciate it. Brian Hoops of Midwest Market Solutions. Janet, we're about ready to begin.